What's up, you guys? Welcome to another video by Real FX. In this video, we're gonna be giving away a free Fibonacci trading strategy. In this video, we're gonna be covering three sections. The first section is going to be Fibonacci golden ratios. The second section is going to be discount and premium zones. And the last section is going to be the free strategy that you can implement with your smart money concepts to improve your trading. And if that sounds like something that you're interested in, stick around till the end of the video, and if you haven't subscribed, please subscribe and don't forget to give this video a thumbs up. Okay, now before we continue, guys, I'd like to encourage you to subscribe to the channel, to like the video, to share with some friends, as that really helps us grow. It really helps us reach many people, and that keeps us motivated to continue making more videos like this. Okay, now let's look at the Fibonacci golden ratios. Well, the Fibonacci golden ratios were discovered by Leonardo Fibonacci, and since then they have been implemented by many traders in their trading. Now on this part, I am going to show you how to draw these Fibonacci golden ratios. And what you need to draw these golden ratios, you need the Fibonacci retracement tool. Now on the left, I have an example of a downward trend, and you know it's a downward trend because we have a lower high and a lower high. We know it's a lower high because this high is lower than that one, and we have a lower low. We know these are lower lows because they are lower than this one. So this is an example of a downward trend. Now to draw your golden ratios on a downward trend, you take the Fibonacci retracement tool. You start from the high all the way to the low of the range. Now as you can see, we have the 78.6%, we have the 61.8%, we have the 50%, and we have the 38.2%. Now these are the golden ratios. Now if we come to the right, we have an example of an upward trend. So we know it's an upward trend because we have what? We have higher highs. The market here is forming higher highs. This high is higher than this one, and we also have higher lows. So every subsequent low is higher than the previous low. So this is an example of an upward trend. So how we plot the golden ratios on an upward trend is that we take the Fibonacci retracement tool, and then we start from the low all the way to the high of the range. As you can see, we still have our 38.2%, our 50%, our 61.8%, and our 78.6%. Now the idea here is that when the market reaches one of these zones, something is going to happen. It's either the market is going to retrace and will start shooting from that zone, or the market will react on that zone. Okay, now let's look at premium and discount zones. Now for me to fully explain this, I'm going to draw a simple trend here. As you can see, this is a simple downward trend, and we are going to be focusing on this high over here and this low over here. So this is going to be our range for this example. Now to draw the discount and the premium zones, we are going to be taking the Fibonacci retracement tool from the high all the way to the low. And as you can see, we have the golden ratios, but now we're going to be focusing on this 50%. So this 50% is going to be dividing the premium and the discount zone. So any area that is above this 50% is going to be taken as the premium zone, and any area that is below this 50% is going to be taken as the discount area. Okay, now before we dive into the strategy, I want to give you the steps that you should follow in order to fully carry out the strategy. So the first step is to find the trend. This is one of the most important steps that you should follow when trading in the financial markets. And then the second step is to determine the range that you are focusing on. And the third step is to place your Fibonacci, and then you look for trading areas in your golden zones. So these trading areas can either be order blocks, can be QMLs, they can be supply and demand. Okay, now let's look at this example here. This is the GBP USD on the 4-hour time frame. So the first rule is to determine the trend. As you can see here, we were on a downward trend, and then when we got here, the market had a change of character. If you don't know what a change of character is, I just made a video about the change of character. You can go into my videos and check it. I did make a video about change of character. So we have a change of character here, and a change of character is a sign that the market is changing its direction from being an upward trend to being a downward trend. So there we have a change of character. And the second step is to determine the range that we're going to be focusing on. Now, after this change of character, the market took this high to the upside. So this simply means we are now focusing on this range. This simply means we are now focusing on this range. So this is our range. We're going to be looking at this range for our supply and demand, or for our other blocks. And then the third step is to place our Fibonacci. Now, because the market moved from being a downward trend to being an upward trend, it simply means you're going to place our Fibonacci retracement tool starting from the low all the way to the high. Now, remember, we said when using the Fibonacci retracement tools, we expect the market to do something when it reaches these golden ratios. And since this is an upward trend, we're only going to be looking at the discount area. We don't take any trade above the 50%. We only take trades below the 50%. So this is going to be the discount area. We are going to be looking for trading opportunities around this area. We're going to be looking at trading areas around this area. So as if you can check here, right around this 78.6%, we have an area of supply. So this is our area. We have an area of demand. We have an area of demand. So this is our area of demand here. So we can use the rectangle tool and then pull it to the right like this. So as you can see, when the market came back into this rectangle over here into our demand, the market started shooting to the upside. So how we could have entered this trade was that we were gonna place our buy limit over here, and then we were going to put our stop loss over here, and then our take profit was going to be this high over here. This high over here was going to be our take profit. So this was a beautiful 1:6 risk reward ratio. So this is a very good example of trading using the Fibonacci on an upward trend. Okay, now let's look at another example on the GBP USD. So we are on the 4-hour time frame, and as you can see, the first step is to determine the trend. As you can see, we are on a downward trend coming all the way from the top to the downside. So we are going to be focusing on this range over here. So this is where we start. As you can see, we had a breakout structure here, and then this is going to be our BOS, and we had the market broke the structure, pulled to the upside, and reacted on this area over here. And then after reacting on this area here, the market pulled to the downside again, and we had another breakout of structure. We had another breakout of structure here. Now, after creating this breakout of structure, we focus on this range right here. We focus on this range over here. Now, focusing on this range, we are going to place our Fibonacci tool. So when we place our Fibonacci tool, since we are on a downward trend, we are going to start from the top, the high of the range, to the low of the range. And since this is a downward trend, we are going to look for trading opportunities or above the 50% zone. So any other block or any QML that is below the 50% is not going to be taken as a significant area. So we are going to look for trading opportunities above the 50% zone. So we are going to be looking for opportunities in our premium area. This is our premium area, and as you can see in our premium area, we have this clean order block over here. We have this clean order block here. As you can see, there's an order block, and then there's some sort of an imbalance that needs to be filled. So this is a very good trading zone. And as you can see, the market started retracing to the upside, and then the market grabbed liquidity over here. And then after grabbing liquidity, the market reacted on our trading zone, and then the market started pushing to the downside, continuing to break structure to the downside. So here the market created another break out of structure. So this is how we would have entered this position. We're gonna put a short position around this area, and then to avoid being kicked out of the market, we're gonna place our stop loss around here, and then we're gonna place our take profit around this low over here. So this was gonna be our take profit, and then this is our entry point, and this is our stop loss. So this was going to be a very beautiful 1:5 risk reward ratio. Okay, let's look at this trade on the GBP USD. We're still on the 4-hour time frame, so we are going to be focusing on this range over here. As you can see, the market broke structure right around this area here. So we had a break out of structure to the upside, and then after that the market pushed to the upside, and then we had a retracement. So we're going to be focusing on this range over here. We are going to be focusing on this range here. So because this is an upward trend, we are going to place our Fibonacci starting from the low all the way to the high. So as you can see, we are in a downward trend. It simply means you are going to be considering opportunities that are below the 50% zone. So we have the 61.8, we have the 78.6. So around the 61.8, we have a clear demand area. As you can see, we have a clear demand area, and that demand area is followed by some sort of an imbalance. So we are going to be focusing on that. So how we enter this is we put our long position, right around this area, and we put our stop loss just below, few pips below our demand area, and then our take profit is going to be at the high of our range. Our take profit is going to be at the high of our range, and as you can see, this is also a good 1:6 risk reward ratio. That brings us to the end of the video, guys, and if you did enjoy the video, don't forget to give the video a thumbs up, and if you haven't subscribed, don't forget to subscribe to the channel, and I will see you guys in the next video.